Morning, everyone, and apologies I'm late. I was late for my previous webinar, which has encroached on this one, so I'm begging your pardon. This is the Crypto Minute. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address, and you're certainly welcome to email me, rshaw@fxcm.com. Today is Wednesday, it's the 6th of April 2022. I'm just going to bring up the high-risk investment one. I'll keep this on screen for a few moments, and then we'll bring up our commentaries disclaimer, and we'll get going with the analysis. Hey Jan, nice to have you on our second webinar for this morning. Thank you very much for joining. All right, let's bring up our market commentaries disclaimer. And references, market scope. We may use TradingView. I did find an interesting article on CoinDesk I'd like to read through to you guys. I think to start though, let's just take a look at Bitcoin, which certainly has turned bullish, which is just simply quite obvious that we've got the higher trough followed by the higher peak. Now we're looking at a weekly chart, so I would suggest this is more significant, say, than if we saw a higher trough, higher peak on an hourly chart, which would be less significant. The longer the time frame, the more significant, because it would suggest something's happening on the fundamental side. The trends tend to follow fundamentals. So the idea here is, if we have to take a look at this, let's just add a 30-week moving average into this. So we're going now to Stan Weinstein's phase analysis, and he uses a 30-week. I think in his book he uses a weighted. We're just going to use an exponential, which is fine. So we'll just put a 30-week, and then I'll make this a little thicker so we can see it. And let's just do some phase analysis here. Okay, so this is an interesting chart. Let's just bring up the latest. So this is, I think, what we need to see. A little bit more out. Yeah, there we go. Okay. Right. So let's just do it as follows. Let's put a distribution in here. Okay. So and we'll make the distributions red. And let's put in an accumulation. We'll put the accumulations in as green. All right, and then of course this would be your markdown phase. And the big question is here, are we getting a mark up phase? Certainly the higher trough followed by the higher peak would suggest there is a strong probability of that. And let's just do one other. Let's just add in a fib here, because I think it's telling. It's just so we don't need the 50. We're actually going to put in a 76 here. Yeah. All right, that's fine. So the reason that I wanted to put in the fib, not so much because I wanted to bring up a fib level, okay, but I wanted to just suggest that the markdown phase that we had here can be regarded as a markdown phase. I mean, we took off a significant amount of the capital value, right? So the value here decreases by when it pulls back about 76% of the previous impulse up. So I would suggest we can regard this as a markdown. Now, what we've got here is price taking out the 30-week EMA, and for the next development, the next bullish development, what is required here? Let's take this out. What is required is actually that the 30-week exponential moving average, the direction of it must turn up. So we do have price on top of it. That is a bullish development. The next bullish development would be the direction of the exponential moving average. And if that turns up, that would be bullish again, because we must have positive slope on the moving average to in an uptrend. In other words, the momentum of prices pulls the moving average behind it. It's like we used a sort of a dog sled sort of metaphor. So price being sort of the dogs and the moving average being the sled behind it, right? So the power of the dogs pulling the sled. So now if the momentum, if the power is there with regards to price, we want to see the moving average push up as well. So it does seem right now that there has been some accumulation of Bitcoin, and take a look at the RSI. The RSI has popped 50, right? So we're above 50. So there does so there is a bullish development in terms of the oscillator as well. Let's just go through the CoinDesk article, which I thought was, given the fact that there does seem to be some sort of accumulation. So this was written yesterday, and its headline is MicroStrategy buys $191 million worth of Bitcoin. The software company now holds 129,218 Bitcoin. So we'll just go through this article. And MicroStrategy, a Bitcoin accumulating business intelligence software company, said it bought another 4,167 Bitcoin for around $190.5 million. The purchases took place between February the 15th and Monday, MicroStrategy said in a statement Tuesday. The Tysons Corner, Virginia-based company, paid an average price of $45,714 per Bitcoin. The cash used to purchase the Bitcoin likely stems from proceeds of MicroStrategy's recent $205 million loan from Silvergate Bank. Mark Palmer, an equity research analyst, told clients. All right, so I think there's 2 points here. The first point, possibly 3 points. So the first point is that there does look to be some sort of accumulation taking place. Number two, it's on margin, right? So it's on borrowed money. So we can make, I think, two assumptions here. Number one, the assumption is MicroStrategy has the confidence to buy Bitcoin on margin, on loan. Now, why would it do that? It would be because it believes that it can repay the loan and obviously keep the excess as profit. The other assumption we can make is that if things go south, okay, so if Bitcoin falls, well, the margin loans, they're going to be called in, so we could see some sort of squeeze down. So now I'm not suggesting one or the other. What I'm suggesting is that there is accumulation, but there is a risk associated with it. With the accumulation, seems to be taking place on margin. Okay, so just keep that in mind. Let's just see what other points we have here. MicroStrategy now holds a total of 129,218 Bitcoins, valued at about $6 billion. And that was at a price of 46,742, so a little bit higher than where we are now. CEO Michael Saylor has said on several occasions that the company plans to hold the Bitcoin long term and has no plans to sell it. The Bitcoin acquired across the 49 period averages to 85. The Bitcoin acquired across the 49-day period averages to about 85 a day, up from the 20 it acquired a day between December 30th and January 31st. So it was actually buying the dip. Okay, so MicroStrategy seemed to be buying into this dip. Okay. MicroStrategy shares fell as much as 1% in early trading. All right, so that's just an interesting article that I found on CoinDesk, and I think it's really informative just to see the just to kind of get the idea of the sentiment. Howard's asking where on CoinDesk is that article. I'm going to just send the article via. I'm going to send it via the chat. So just let me know if you guys receive this. I sent it to everyone. How did you get that? The link? Okay, cool. All right, let's take a look and do some more analysis here. So we've done the weekly. Let's go down to the daily here. And what we want to just keep, actually want to do, so this is interesting. I forgot that I had this ATR up here. Which is average true range. I did write an article. I don't know if it's been accepted for FXCM Pro, which is our prime broking. I did a sort of analysis of the standard deviations and the average true range of a number of select instruments since the conflict began in between Russia and Ukraine, more accurately when Russia invaded Ukraine. And the idea is that all of the standard deviations have increased. In other words, standard deviation is a measure of risk. And we can debate sort of how good a measure of risk it is, because upside, see, standard deviation is a movement around the mean. Is upside movement actually regarded as risk? Well, it is volatility. So volatility is risk. You can use something called downside deviation, but we're not going to talk about that today. Just that the standard deviation between all the instruments have increased except for Bitcoin, which I found fascinating. Bitcoin standard deviation is extremely high regardless. Okay, it's a very volatile instrument, but its volatility has come down since the beginning of the geopolitical crisis, whilst other instruments volatility has increased. So I thought that was quite interesting. Okay, now that was this ATR. So I'm just going to delete that. What we have here is something that we should keep an eye on in terms of Bitcoin, and I'm using Bitcoin as a proxy. Sorry, this is DAX. Sorry, let me just bring up Bitcoin. I'm begging your pardon. So I'm using Bitcoin as a proxy for cryptos. Okay, so we've got the accumulation in. We want to see if the exponential moving average pushes up. Now we go into the daily, and here is, I think, something quite interesting in that we holding support at our zone 1. Okay, so if we had applied impulse correction to it, we could possibly get this 1, 2. That's the impulse. 2, 3. It seems to be that at least on the daily, we have some sort of support here, which we're just going to have to monitor. The idea now is if we have got this 1, 2, 2, 3, we in the bullish area. Well, perhaps this is okay, it's a dip in the uptrend. Now, clearly, if it falls back into the neutral area, that would negate this assumption. But at the moment, there does seem to certainly be some sort of support at, and the current candle has taken advantage of that. We've got what seems to be a weekly accumulation. We have got a weekly pop in the RSI. We just want this weekly EMA to turn up. We've got a pullback, okay, in what looks like to be the bullish area. What's the hourly chart telling us? We'll go down to the hourly chart, and now we get a very interesting looking hourly chart, because you can see that daily, okay, the daily support is actually on the hourly S2, so that S2 acted as strong support. Now what we want to do is we want to see, do we get a bullish cross here? We've already got the bullish cross here, but it's a two signal, dual signal system. So we've got 1 out of 2. We just need the EMAs to cross as well. Now, if they do cross, then we want to get that angle, the angle and separation in the EMA. So here's the angle and separation. That would suggest momentum, right? So we need the cross, then the angle and separation. We've got the cross here, but we want it to make its way to 80. Okay. So once you get the angle and separation in the EMAs and you get the stochastic moving to 80, you get a nice swing. Okay. So this is, I don't know, you know, if anybody traded this, but here's a swing. But you can see that right, this one here is a swing as well. It did a little, but not enough, I guess, because we didn't hold the 80. If we can just find a place where it holds the 80, anyways, you guys know the idea. The longer we spend in 80, the greater the underlying momentum. Now, just to round off this analysis, I think we must look at US dollar. Why must we look at US dollar? Because US dollar is an integral part of the Bitcoin instrument. It's valued in dollars. So let's just go down to the US dollar here. And what I think would help Bitcoin, is if actually the dollar, so we've got a cross down here, but we're still in the 80 area. If it drops below 80 and we get some sort of bearish cross here, that potentially, I think, helps Bitcoin today. The issue for Bitcoin is that the dollar is strong, and that is going to influence the Bitcoin value. The weaker dollar is, the better it is for Bitcoin. What we do see here with Bitcoin, if we just go back to Bitcoin, is that there does seem to be some sort of value that's being attributed to Bitcoin because it's outperforming the US dollar and the US dollar is moving up, right? This is actually interesting. We've broken this, I think, what did we call it last time? Maybe a wedge, I think. So the question was this a continuation pattern? It turns out it doesn't look to be a continuation pattern. It looks to be an accumulation pattern. And that's exactly what we said on this chart here. Again, don't look at Bitcoin in isolation. I think you must look at it in US dollar. Theoretically, Bitcoin divided by US dollars will automatically discount a dollar strength, and it should be reflected in here. But we must just understand that the dollar may be very sensitive to the Fed, and the Fed's being very aggressive at the moment. That may influence Bitcoin. However, what would be interesting, and again, I must stress this is just an inference, is that the Bitcoin market here may be suggesting that the Fed doesn't have the luxury of being as aggressive as it needs to be. Yesterday, we spoke about that the Fed is being aggressive because of the jobs market. That was an hypothesis put forward, and it does look that is their current line of thinking. What Bitcoin may be suggesting here, and let's just maybe even take a look at gold, is that, well, that may be, I don't have gold here, let's just add it in. That may be overly optimistic. Again, I did listen to an interview yesterday on Bloomberg, and the particular economist there, I can't remember her name. Her first name's Frances. She's really a good commentator. She was suggesting that the Fed may not have that luxury. So anyways, the Bitcoin gold market will play into how this unfolds. 1, 2, 2, 3. Okay, is this a dip to be exploited? So this is where I think Bitcoin analysis actually becomes really interesting, because we're in an environment that we haven't seen for 80 years, right? Stagflation. So it's very, very interesting. All right. Any questions? Pop those in now. Anna is asking for an article on standard deviation. I don't have one specifically that I've referenced, but if you email me, and I can take a my article. Yeah, just send me a link. I don't know if I can send it out yet, because the FXCM Pro guys were going to use it themselves. What I'll do is I'll cut and paste that part, if that's okay. I'll cut and paste that part of the article for you. They just send me an email, and I will. I'll certainly do that. So Howard's asking, this is a great question, by the way, Howard. So Howard says, how do I see the accumulation? So it's more an inference, okay? So it's based on the, sorry, I'm going to clean this. This is a big mess. This is from yesterday. Let's get rid of this. It's based on Stan Weinstein's book, okay? So the idea is we're using a pattern, sort of a cyclical pattern, to try and make an analysis. The analysis itself may turn out to be incorrect, but the basic pattern is distribution, okay, into markdown, into accumulation, into markup, into distribution. So it's kind of a very digital type of pattern. You know, you kind of get this type of a thing. This is straight from Weinstein's book. If you haven't got it, it's really a good read. It's an old book. It was written, I think, in '87, but in my opinion, it's really a good book. There are other, so that's one of the models. The other model is a growth model, which would be something like this. Weinstein doesn't talk about the growth model. He talks about sort of this would be distribution into accumulation. This would be kind of a value type of model. So, and then what he does is he adds a 30-week, moving average, and the 30-week moving average is how he kind of, what he uses to assess the cyclical nature of this. So it's got quite a strange name. It's like sort of an odd name. It's called How to Profit in a Bull and a Bear Market. So just, if you go to Amazon, just type in Stan Weinstein, and you'll get it. If you can't find it, how just send me the email. Send me an email. I'm happy to direct you. All right, so Anna's just sent. All right, Anna's just sent this. I'll send this to everyone. Thanks, Anna. This is a video that she's, I'll just send this to everyone. It's a YouTube video. I haven't watched it, but this is, so I'll watch it after we conclude here. The other thing, just one final point, Howard, on the accumulation, and then I think we can conclude. Even if we didn't call this accumulation, let's go here. Even if we didn't call it accumulation, that's fine. That's fine. There's other ways to analyze it. So we would just analyze it in terms of trend. So then you'll find your reference trough. Okay. You would find your reference peak. Okay. Then here you've got your higher trough. And as soon as you've got your higher peak, that's the definition of uptrend right there. Howard. So that's the accumulation. The trend in of itself. So even if you didn't read that book, the trend over here has gone into uptrend. Now we've got to watch it. If it carries on making higher trough, higher peak, well, this is a uptrend. Okay, so that's what we'll watch for. If the accumulation actually proves false, then we might get something like this. Okay, then we might get something like this. But it would be the peaks and troughs that would tell us, right? So that would be sort of the opposite type of movement. So we can still look at it just using trend analysis, which is, to be honest, probably the best way to look at it. It's just I found I just find the cyclical nature of Bitcoin to be quite amenable to the Weinstein method, if that makes sense. All right. Any other comments? So I hope that helps, Howard. But of course, just send me an email if you can't find the book. All right. No other questions. I think let's wrap up here then, guys. And what we'll do is we will reconvene tomorrow. Thank you very much for your time this morning. Much appreciated. And have a good day. Looking forward to speaking with you guys tomorrow. Thanks.